I think Intel could become somewhat in that same bracket of too important to the US economy to fail. So it makes a very interesting place from a stock investor where there's a very big safety net there for Intel, I believe. It's getting loads of investment. So it's investing over $100 billion in US production. I think what would be a great thing to happen is if Intel split off its chip design company and just focus on the foundry. And then all of its efforts could be to becoming a true alternative to Taiwan Semiconductor. So there's a lot of embers in the fire here, potential green shoots. Emmet, how are we getting on?
How are you, Michael? How are things down in South France?
Lovely. No, yeah, we got a bit of a grey day outside for the first time in a while, so I really can't complain.
And
Had about
same up here in Dublin. It's kind of the first dark, slightly damp autumnal day, I think, in a while.
Yeah, I got a little concerned. Do you know when it just kind of you randomly remember daylight savings time? Um,
Mm.
all of a sudden, so 2 weeks, it's about to get a bit dark and dreary and miserable.
Do you know, a former board member of my Wall Street is a guy called Gary Hill, who's one of the most wonderful people I ever met. And his brother, Stephen, is one of the most influential linchpins in American music, specifically African American music. So he was the CEO of BET, which is a TV channel. I think it's a Black Entertainment Television, something like that. So Stephen knows and has met everybody, absolutely everybody from the music industry, especially from Motown, whether it's Stevie Wonder or Michael Jackson or Lionel Richie or Diana Ross or Rihanna. Like this guy, Stephen knows everyone, and the relevance of that. And he's an absolutely amazing guy. Like you kind of look at him on Instagram, and he's out with Paul McCartney, or you'd see him kind of going out for dinner with Sting. So he's a very, very, very connected in the world of music. But the reason I mentioned that is twice a year, he writes an email to his friends, which I'm privileged to receive, and it's always on daylight savings. So he writes for the hour that was lost and the hour that was gained, and he writes a story from the history of his life, which is absolutely amazing. Now, I guess as a segue, should any of our listeners be interested, drop your email to pod@mywallstreet.com and I'll ask him nicely. Now, to add you to the list, it's literally from his Gmail. He may not do it, so I don't want to make it a promise, but he always has a great story. And in the last daylight savings email, he told a story about he had won a ticket to go to the Grammys before he was, let's say, famous himself, and he was sitting up in the nosebleed seats, the back, top row, a back seat, and he saw in the very, very front row Michael Jackson sitting beside Quincy Jones. And he said it was a goosebumps moment because this was his hero, like unadulterated hero. And he decided, I'm going to go down there and introduce myself to MJ. And of course, you can imagine the layers of security and the story he tells about going from up there in the nosebleed seats to actually achieving what he set out to do and way, way more. It's just brilliant. So anyway, daylight savings coming soon, and I'm looking forward to getting Stephen Hill's biannual email.
Very good. All right, you're kicking off the show. You have a bit to say first.
Well, I have an interesting stat for you, Mike. Here it is. The easiest and most effective way to have earned 25% annualized returns from Microsoft since its 1986 IPO required holding through 16 years of no returns, 16 years of nothing en route to some of the greatest wealth creation in history, wealth creation machine for every person. But a share bought back then at IPO was kind of split adjusted about 10 cent or thereabouts. And now today, as we record on Wednesday, 15th of October, a share in Microsoft is about $515. So to use that old tired example, had you invested $1,000 in Microsoft back at IPO and just sat on your hands from 1986 to today, so that's 39 years, you'd have $5.1 million. So really, the two ingredients was having spotted Microsoft I guess the second ingredient is having $1,000, and a third ingredient is temperament, are being extremely forgetful. So I, as you well know, and as our listeners know, I want some of these. I want stocks that I can point at and go, wow, I bought Microsoft in 1986 for 10 cents an equivalent. And I had a couple along the way. Our listeners know who they are: Netflix and Tesla and Chipotle. And I know my next delivery is going to come from within Horizon. That's just, I know it. And as long as I can keep our members engaged and believing in the life-changing power of buying and holding incredible companies, my work is 80% done. I just have to keep telling people, don't panic. So I really wanted to start this podcast with that message: don't panic. Because according to Thomas Phelps, who wrote a book called 100 to 1 in the stock market, and then its kind of successor and follow on, Chris Mayer, who wrote the book 100 Baggers and Where to Find Them, who I interviewed on this podcast, and we regurgitated there 2 or 3 weeks ago. 100 baggers, stocks that grow 100 fold in value, take between 16 and 25 years. So it's not something that it's like, okay, I've bought it, where's my 100 bagger? And I've, as the chief pilot of Horizon over the years, seen people spooked out, bothered, annoyed, and actually in many cases quite angry with me because 2 years later, 3 years later, a stock is down 20 or 30% or 40% or worse. Which was the case for Microsoft, by the way, in those 16 years. I'm
Yeah.
economizing in detail. That's just the way it goes.
Steve Ballmer has a lot to answer for.
Yeah, well, that's right. And say nothing. But Horizon, the service I'm running, is just a minnow. It's coming up to 6 years old. I'm 50 years old, and I hope I have everything in place to keep Horizon going for very, very many more years. And it is built to find the next mega winner. It's my life's pursuit. So for a short time, as those who heard last week, we are offering it for over half price off. That's $500 off $999. So you pay only $499, and there's only a handful of spots left. And just relevant detail, we're repricing it to $2,000 in 2026. So lock in effectively $500 today. And in fact, if my Wall Street eventually goes all in on profit, we're always going to keep this podcast. We'll keep Horizon going. But Horizon is going to be run on if you're in basis, no more members. And to existing members, on that point, once you're in, you will remain on the price you're on. So, and, for all of those people listening who are still considering becoming a member, just sign up today for this, effectively $1.5 grand off next year's 2K ticket price. So you pay only $499. I will find the next Netflix in a new guise. And that said, as I said, I bought Netflix, but I also bought it in Horizon, which is up 434% since that purchase. But that's boring. 439%. What? Snorefest. So what? I need to stay calm and get a couple of 100 baggers, which are stocks that increase 9,900% from the purchase. 100 bagger, you go up 9,900. If you sit down with a pencil, that will make sense. But let's say I need to find stocks that are going to grow 10,000%. That's what I'm chasing in slow motion. It takes 16 to 25 years to land 1, 2, 3. Sign up today before we change the price from $499 to 2K. Or even worse, just shut the door, remove the door, build a wall where the door used to be. So email pod@mywallstreet, and Frank or someone on his team will look after you. Right, Mike, on with the show.
Yeah. Funny you said build a wall there, because we're moving into. I don't know what to call this. It's this kind of weird wrinkle in what is already an incredibly weird stock market. But essentially, that's just the government taking up equity stakes in public companies. So the Trump administration has made this decision where it's kind of got a short list of companies it believes to be vitally important either to national security efforts or to the industrial policy it wants to bring in. And we've talked about the isolationist viewpoint that's becoming clearer and clearer, this American first policy. And so I want to talk about two different things. First, I want to talk about the kind of rare metals that has become just this absolute very very aptly called like a gold rush essentially over the last couple of weeks. You've probably seen the headlines by now, or else you're wondering why everyone is running up to buy these rare metal stocks. So far, the government is taking up a position in MP Materials. It's about $400 million worth of shares. It's got about 15% ownership. And essentially, what the US is doing is trying to strengthen its access to domestic rare earth minerals, because this is an industry completely dominated by China. China produces about 70% of the world's supply of rare earths from mines and processes almost 90%. And that's when the US is seeing, say, China as some form of adversary, to be that reliant on the country for the materials that go into semiconductors, the materials that go into batteries, the materials that kind of fund and like power an awful lot of everything we do now. It makes a lot of sense, even though it is quite a weird tangent for the government to go and be building stakes in public companies. So it wasn't just MP Materials; it was Lithium Americas as well. Lithium obviously is one of the key components that goes into batteries, especially EV batteries as well. So the Trump administration built a small equity stake there as part of this U.S. Energy Department loan thing. But again, essentially, it's just making sure it has access to these lithium resources. I'm just looking as well. So the third one is Trilogy Metals. It's a Canadian mining company which focuses on copper. And I'm just looking at the three stocks I mentioned there, year-to-date returns. So MP Materials is up 470%,
Mm.
Lithium Americas is up 200%, and Trilogy Metals, which is a tiny company. The stake the US took was, I think, $35 million or something like that. Stock's up 700% year-to-date.
So
So
I
these are,
haven't been following the story at all. I mean, literally, you're schooling me here. But just a quick question: I presume that run up in share price happened only after the administration went in, or did they declare they're going in and then was there a rush? Tell me.
well, so there's a bit of both. So obviously, the vast majority of it is from them
Mm.
buying up these positions, but there's also other companies. Critical Metals was another one, and can't remember the third name, but there's also these companies where they're seeing the US and China trade tensions, because, as I mentioned before, China has a complete and almost total control over this industry. And so if China is getting stuck with 100% tariffs like Trump threatened last week, what is that going to do for this? Because that's been kind of China's ace in the hole, where they're like, oh, well, we can keep this away from you. So the US is going to have to look elsewhere. So yes, it is very much based on the US buying up stakes, but the other rare metal stocks have been shooting up as well because of this trade tension between China and the US.
Mm.
And it makes a lot of sense in that, these are vital for defense, is a very important aspect of this. Do you know what I mean? Our electronics, our semiconductor supply chains. These are things that are becoming more and more important in this. When you inject AI into the picture, and the necessity for AI supremacy. Because if you think about it from a military aspect, if one country has a kind of ring fenced the materials to build the next generation of AI chips, that is kind of giving it a supremacy that the US is not going to be comfortable with. So it does make sense from that point of view.
It does, yeah, it makes a lot of sense to me. I mean, if rare earth minerals are, sorry, not if, rare earth minerals are a critical component to tomorrow's world. And
Yeah,
if you don't got none, you don't got no future.
yeah, and so
Pretty much
essentially,
that path.
what the administration has done is drawn a line in the sand and says we don't want to have to rely on a potential adversary for this. Now, whether that's possible, whether there is enough there outside of China within these companies, I'm not sure. Like, as in, I think that deserves a much deeper dive than what it said. But the mania around them now is all built around this tension between China and the fact that they need to kind of domesticate the supply chain there. These resources are just too important to allow foreign government control. And then, yeah, this isolation policy, we can dive a bit deeper. There's an America First investment policy which was launched kind of at the start of this year, and it's quite an isolationist view of the world. I don't want to delve too deep into the politics of it, but the general gist is that the US believes it's strong enough to rely just on itself. This thinking was behind the H-1B ban as well. The H-1B, not ban, but bringing in that fee for H1Bs, which, do you know what I mean? Like, isn't that is shooting yourself in the foot? You're reducing your access to talent there. And I think the tech companies in Silicon Valley would have gone, wait a minute, now we don't have the sheer supply of engineers needed for that. And like, there's more political games involved there, and maybe tension between India and what India is doing with Russia or whatever else. But at the gist of it, and I think you're seeing it especially from your man Howard Lutnick, the guy from Cantor Fitzgerald, who seems to be the kind of acts like a court jester, and then like under the hood, there seems to be a very clear push towards USA first, isolationism. We're strong enough. We don't need help from other countries, especially ones we see maybe as not the friendliest, especially China. And so that's where all this is coming from. And that's kind of set up. That's where the rare metal rush is happening right now. But then I wanted to talk and get into it a bit deeper with the other company the US government took a stake in, which is Intel. So you heard about this. The US holds, I think it's about a 10% equity stake now in Intel, which is part of a weird deal where essentially Intel was due about $9 billion from the CHIPS Act, which was brought in under Biden, and it's essentially trying to again bring semiconductor production back to the US because they're so reliant on Taiwan in particular. Trump saw this money going to Intel. It was like, look, you're not getting this money unless we get a bit of a taste, essentially. One of those art of the deal things, I guess. But this one stands out with me because we talked about how dependent the world is on Taiwan Semiconductor. It's responsible for about 50% of the world's foundry market. So foundry is a chip manufacturer. It's also known as a fab. And it'll take, say, designs from NVIDIA or Broadcom or Apple, all of these companies that don't manufacture their own chips. They're called fabless chip designers. So Taiwan Semiconductor, TSMC, makes them for them. And it's why it's seen as one of the most important companies in the world. Like, it's pretty obvious, you see a company that kind of global importance based in Taiwan, and it's easy to get a little worried. Obviously, we see the frailties of the global supply chain come to the fore around COVID. That's one aspect of it. Geopolitically, very fraught, to say the least. This isn't new news, but China has always had its eyes on Taiwan since essentially the Mao revolution. That's a very interesting story to dive into as well, because Taiwan actually has its eyes on China. If you listen to them, I don't know how possible that is, but whatever about the kind of the history of it, the geopolitical backing there of, okay, there is high tension between China and Taiwan. Obviously, China has an awful lot of power there, and even we were saying in recent years, maybe NATO is looking quite weak in the form of what Putin is doing in Ukraine or whatever else. Maybe Xi Jinping, who's cozied up to Putin a lot in recent years, maybe he's getting ideas. I'm not sure, but whatever else, very very fraught geopolitically. Obviously, COVID showed the frailties of it too, and then the cherry on top of all that is that it's also on a tectonic fault line between the Eurasian plate and the Philippine Sea plate or something like that. So on top of all of that stuff, earthquakes are a very real risk to Taiwan as well. So if you're having 50% of all the chips in the world come from this one place, it does show a bit of over-reliance and a bit of over-dependence. You know what I mean? We're talking risk factors that you put in a 10K or whatever else. That'd be number one, underlined and in bold. So you see all that. And yes, it makes sense that the US want to have a serious alternate on home shore. So the problem is Intel, which has kind of been a hot mess for about 10 years. It made some, it's funny, we were talking about Steve Ballmer and Microsoft missing the boat there around the 2000s to 2015, wherever around that decade, I suppose. Intel was very similar from about 10 years ago. So it didn't really transition to advanced chip manufacturing modes fast enough, and it underinvested in key technologies, one of the main ones being extreme ultraviolet lithography. So have you heard of the company ASML?
I did indeed.
Yeah, so that's essentially what ASML did. They make these extreme ultraviolet lithography machines, which
Yeah.
are essential for advanced chip design.
Mhm.
So,
When you see one of those machines, it's a glimpse into human creation, a complex at a complexity level that's unreal. But
yeah,
yes, when I've looked at those machines online and I'm like, heavens above, how did we ever arrive here?
yeah. I mean, it's funny we're talking about these companies, so ASML and Taiwan Semiconductor, how important one single individual company is
Hmm.
to just global supply chains, like on
Yeah.
a massive scale. And
Pure
they kind
linchpin
of,
stuff. Yeah.
yeah, it's like the Jenga block, and there's
Hmm.
one little Jenga piece on the very bottom that you really don't want to tip over. Um, so Intel missed the boat on those two main things, and Taiwan Semiconductor did the exact opposite, and basically took a commanding lead in advanced chip design. So it also helps as well that Taiwan is just a foundry, whereas Intel designed its own chips and then manufactured them. So companies like Apple, Nvidia, AMD, they could innovate a lot more quickly with Taiwan Semiconductor instead of being sold Intel's latest design. Do you know what I mean? They could go and design themselves.
Hmm.
So it's not any one thing, but it's a series of missteps that, in the space of about 10 years, gave Taiwan Semiconductor a huge lead. And that's how they've all become so reliant on Taiwan. But with this isolationist mindset in place in Washington, and especially one that is trying to avoid reliance on China, I realized that came out like a Trump impression. Where do we stand with Intel? And this is a very interesting point for the company because it reminds me a small bit of Boeing in the sense of Boeing did everything wrong over the last 5-10 years, and it's still chugging along. It's very much too big to fail, too important to
Mm.
fail
Oh
for the
yeah.
U.S. economy. And I think the way the investment that's gone into Intel, the positioning on it, and the over reliance on Taiwan Semiconductor, that's all a relatively new thing. So I think Intel could become somewhat in that same bracket of too important, not too big to fail, but too important to the U.S. economy to fail. So it makes a very interesting place from a stock investor where there's a very big safety net there for Intel, I believe. It's getting loads of investment. So it's investing over $100 billion in US production. It's got a new fab in Arizona with the aim of kind of making it the most advanced semiconductor manufacturing, uh, making sure that that happens on US soil now instead of in Taiwan. It's looking at more just focusing on its foundry elements, looking at customers there instead of trying to flog its own designs as much. I think what would be a great thing to happen is if Intel split off its chip design company and just focus on the foundry, and then all of its efforts could be to becoming a true competitor. And not it's already a competitor, but a true alternative to Taiwan Semiconductor. So there's a lot of uh, there's a lot of embers in the fire here, potential green shoots. Nvidia has already invested 5 billion into the company. I wouldn't be surprised if the hyperscalers got involved too. Amazon, Google, Microsoft, Apple, OpenAI, like Tesla, whoever, because this is viewed as a matter of national security. That Intel works out and takes back control from Taiwan, and wrests away the power that China could potentially have over the entire world's semiconductor production. It'll also get you in the good books with the Trump administration. It does make an awful lot of sense that these companies will come in, they'll help Intel, and pretty much, yeah, I just think it makes a very interesting case for Intel in terms of, we talk about asymmetric bets and like risk reward and reward outweighing risk. Feels like there are not a lot of risks when it comes to Intel. Just the fact that these powers need and want it to do well, despite all of the missteps, despite all the managerial stuff, the CEO conveyor belt and everything else. Intel needs to work for the US government, for these US based companies, for global supply chains, for geopolitical tensions, even flipping tectonic plates shifting. Intel needs to work. So that's kind of where I'm at, and I think it's a very interesting point for a stock. And yeah, look, the U.S. government is telling you to essentially telling you to buy it. We're backing this. why wouldn't you back it too? So yeah, that's where I'm at. It's an interesting point. I don't think the US government has ever been this involved. Maybe it's taking after China in that sense. Like China, the Chinese government has given some of its public companies huge advantages. The EV space in particular, it's got loads of backing. That's a lot of the reasons why companies like BYOD and NEO have been able to produce cheaper electric cars, because they got a lot of government backing. Huawei was one as well. Actually, they weren't allowed into a lot of countries because of the Chinese government's influence. So it's almost like in order to fight China in a way, the Trump administration is in some way emulating them and helping its public companies. And it looks like that's what it's doing with Intel right now. So it is a very interesting point. It makes an interesting investment case. I think I could be convinced pretty easily that Intel long term should work out from here. So yeah, what are your thoughts? I kind of went on a bit of a rant there.
No, I think it's a fascinating conversation. Firstly, because when you look at governments, like they're one of their many duties to make sure that tax money is being spent effectively and that they are looking after the greater interest of the nation in the decisions that they make. So you could say that every decision is a consequence of the strategy. So whenever I've looked or observed governments getting involved in divesting or acquiring a company, it's a matter of strategic interest. And people my age and generation and nationality will remember in the whatever it was, year 2000 or thereabouts, the Irish government divested its telecom operator, the national telecom provider. Because up until that point, through the evolution of the nation, it was a matter of strategic interest that everybody got a phone line. Then it became a matter of competitive interest. So they divested uh, what was known as Aircom, now known as Air. And that was
Hmm.
something like 25 years ago.
How
And that
did
was the
that go
first.
for the investors of Ireland?
Well, that's quite interesting. And
That's
that
another
is a
story.
it is, but it's a relevant story, even though anecdotes do not make data. So you can look at one tiny example and extrapolate it and go, well, and therefore, but that's the wrong thing to do. But in Ireland, as I've probably said on a podcast many hundreds of episodes ago, had you stood on the top of Grafton Street, the main shopping street in Dublin, and straw polled 100, 10 people, 100 people, 1,000 people at the time, the government was selling off Aircom and advising its citizens to buy shares, which is a whole other conversation. And asked people on Grafton Street, is Aircom a model of operational efficiency? Is it, is customer at the center of the world? Is it led by a founding, passionate CEO? Is it whatever question that would come from the annals of great stock investing wisdom? The answer that 10, 100, and 1,000 people would have said is no, no, no. Somehow, though, we were, as a nation, convinced to buy shares to the point where our banks were giving us interest-free loans to do so. But looking at Ireland in the evolution of this state, we are historically extraordinarily unsophisticated when it comes to the stock market. Not because we're an unsophisticated nation, but because we are a nation that came a different route. Whereas if you'd done that in America in the year 2000, or again, whatever year it was, late 90s, it would have been wholesale ignored, right? So bringing it forward to your point, we're flipping it over to a highly sophisticated capital market, arguably the most sophisticated capital market in the world, America, and they're doing something in the opposite direction, which is they are looking at these assets, whether it is literally an atom on wholesale, or the assemblers of atoms, and they're saying our future is fully dependent on our ability to have access to this resource. And it feels to me very much like a nation's need for clean water, which is the simplest, most base need of every nation on earth, that they can get clean water. And a lot of wars in history were fought either over religion or access to clean water. Our land, within that land was clean water. And this to me feels very analogous to clean water. A nation needs, like a nation like America must have all the building blocks in place for the year 2030, 2040, 2050. So I think right now what they're doing is very strategically smart. I don't have a view as to which companies are better, but certainly you can imagine that the administration has taken quite a strategic view of all of that and done the right thing. So I mean, I have a front row seat in the balcony of ignorance at this point, and you've, as I said at the start, you've just schooled me on most of it. It was news. A lot of what you told me was fresh information and touching on news. I was like, I didn't know that. So I think it's a very interesting one to watch. Another thought I have is over like Trump is he's not a year into his presidency. What other assets might be acquired? I know he bought a whole vault full of Bitcoin in the recent past, and now we're looking at things that are effectively the building blocks of an AI future. So I'll be curious to see what else is coming down the rails.
Yeah, yeah. I don't really know how to react to governments buying up public companies like that, but
Mm.
they're kind of telling you something. Do you know what I mean? They're voting with their feet a little bit.
I was listening to a podcast recently to an Irish social commentator called Blind Boy, who some of our listeners will
The
be aware of. Um,
American
I
ones won't, but
no, they certainly, yeah. I had guffawed at ever listening to this guy till my
oh
wife.
really? Oh, he's okay.
Yeah, I had never, up until I was on a plane recently, and my wife's like, "Look, just listen to it," because he was interviewing what I suspect will be the future president of Ireland. It's a 2-horse race at the moment, so
Well, yeah,
she's
I'm not getting
50% chance.
involved in that, but Jesus, I know who side I'm on.
Yeah. So anyway, the I was listening to this podcast, and in he was interviewing Catherine Connolly, one of the two candidates for presidency, and the two of them got quite involved in a conversation around neo-libertarianism, I think they were calling it, which for me, I had to hop on. Well, I forgot to hop on. I'd planned to hop on the internet to read up on it. But the crux of the discussion was that governments are divesting all resources. Sorry, the Irish government has a wider strategic picture of divesting or privatizing things that are critical to the Irish interest. And this is something that, as I said, look, I am the most ignorant in the room on the subject. I sit there, I listen, and thoughts pop into my head and out. But I certainly think that the bigger picture is you could argue either side of the coin. As a lay-by person, you could say it is not in the interest of a government to take a stake in anything other than maybe health, education, and social welfare. Or you could argue that the government should have a hand on the wheel on all industry that is critical to the future of that country. And I think sitting here in this tiny little island floating in the Atlantic, you and I have had a view that's informed by small nation, figuring it on their own. And then you look to America and you see this bigger strategic thinking, in my opinion. And I happen to think that the American administration is correct in doing what it's doing. But as I
Yeah,
said, front row seat, balcony of ignorance.
that's true as well. I'm sure flip flops every 4 or 8 years. Do you know what I mean? And
Yeah.
this is funny as well
Yeah.
because Republicans are classic small government stuff and let the private markets dictate everything. And now they're here getting involved with buying up public companies and going very socialist esque in terms of controlling a lot of private interests. So we won't delve too deep into it. Where are we going next? We're talking profit next. This
Yeah,
is the
and
news
actually,
section.
before we do, I just remembered to say something. So we have a listener called James in Liverpool. James, can you hear me? I'm talking to you. My co-founder John was talking to James during the week, and I just thought I had to shout out to the guy because he told John that he was inspired to do a QFA because of Stock Club. Maybe to disprove the stuff we're saying. But I just wanted to say hello to James from Liverpool, who is one of our very long time listeners, and to express my gratitude for his listenership and trust. So, hello, James.
How are you, James? You're also reminding me that I have loads of CPD to do. So thanks for that.
All right. How many hours have you to ratchet up?
I think it's 15, and I haven't started. So yeah, good
Something
little
to look
shock
forward
to the
to.
system there, James. Thank you for that.
Right, Mike, starting today, we're adding a new bite-sized segment to Stock Club called Following Profit, which clearly we picked as a play on words. So the definition of a prophet is someone who foretells the future or reveals truth with insights that others can't yet see. And that's the meaning behind the service we've launched, Prophet, which I hope is quite obvious. Now, in religion, prophets were messengers who interpreted the divine will, I suppose, and we're going with the plain, ordinary, everyday, future-telling type, as opposed to someone who God has whispered into the ear of gently. So we're just talking about plain, ordinary prophets standing on the hill, blabbering on about the future. So, Prophet, this new segment in Stock Club is called Following Prophet. And in this segment, Mike, going forward, you or I, we are going to spotlight one of Prophet's current 10 stocks because it's really very interesting, the stocks it's turning out every 4 weeks. And for absolute clarity, so people are like, what's this now? Uh, my Wall Street has two products: Horizon, which I spoke about at the top of the podcast, and it's my hunt for 100 baggers, and it's story driven, and it's concentrated folio, and it's explicitly long term. I buy stocks on Horizon in the hope I'm going to hold on to them for 10, 15, 20 years. And it's basically Horizon is doing what I've been doing my whole life, and I always will. And it has fewer moves and bigger swings, as it were, as we'd say in America. And Horizon is all about sitting through the boring middle bit on the route to massive gains. Whereas Profit is a rules-based, low-effort system for people who want a just tell me what to do service. They don't really want to tune in and listen to me blather on about a company for years and quarters. So anyway, Profit holds 10 stocks. That's it. When you sign up for Profit, you get 10 stocks. It rebalances monthly, or specifically every fourth Friday. And what happens is it says sell stock A, B, and C, and then take the money from that sale and put it equally into D, E, and F. Okay, so that's how it works. And its track history is, it's savage, if you excuse the expression. Like, Profit's track history is unreal. And over the subsequent episodes, we'll explain a little more about Profit and how it was conceived and built, which I think will be quite interesting to people. But what's very interesting, as I said, about the service is that despite it only identifying large cap companies on one of the two big stock exchanges, which is the New York Stock Exchange and NASDAQ, which implies that any broker from Revolut to Vest to SoFi can make the trades. Every few weeks, it delivers a list of stocks that very few people discuss or even know about, which is why I was saying to you yesterday, I think it's going to make for a very new, interesting segment. And I need to caveat, most importantly, and we'll probably say this every week henceforth, that we're talking about a company in the knowledge that Profit may sell tomorrow. We don't actually know, unlike Nexus and unlike Horizon, where you and I, Mike, and our team debate a stock's addition or removal, and we can see it on the train tracks. With Profit, it is very much codified, and
Yeah, it's
everything.
not. It's as much momentum as it is fundamentals. So
Oh, for sure. I mean, like, so we could talk about Acme Bricks here on Stock Club, which we record on Wednesday and it goes live on Thursday, and find then Profit on that Friday. As I said, it changes every fourth Friday. Might sell Acme Bricks, and all of a sudden, that very conversation might have gone stale. But that's the world we live in. So anyway, look, let's get on with it. So that's the new segment called Following Profit. So the inaugural stock from Profit, one of the stocks it currently owns, and it's up 60.59% since it identified it and told people to buy, is a company called Howmet Aerospace. How I Met Your Mother Aerospace. Howmet Aerospace. And Howmet, isn't that a name of a show, How I Met Your
how
Mother?
I Met Your Mother. Yeah, yeah.
Okay, phew. If it wasn't, that would have been a total. Can we edit that out? I don't know what happened in my head. So, Howmet Aerospace is one of those rare industrial companies that has completely reinvented itself for a modern age. And if its name is unfamiliar, I'm pretty sure our listeners and families at home, as it were, will know its heritage, because its roots go back to a company called Alcoa. Have you heard of Alcoa?
No.
Well, it's an American metals pioneer that helped shape the aerospace industry, ostensibly in the 20th century. So, after a whole load of restructuring events, Alcoa, Alcoa split in 2016, which I remember, and it created a business called Arconic, which focused on engineering products, and then Alcoa Corporation, which was all about smelting. And we've all seen videos and TV shows with giant metal machines with molten lava, metal flowing out. Well, that's kind of what the Alcoa Corporation does. The most people be like boring, but we know it has to be done. But it's the other one, the Arconic business, that's kind of interesting, because then in April 2020, Arconic broke itself apart, and they had a higher margin precision engineering business that ultimately became Howmet Aerospace. And it's the stock that Profit bought a few months ago and is still holding despite thousands of other contenders for those 10 spots of active stocks that it recommends. So the
Mhm.
separation from Arconic gave this company a clean focus on a single mission, which is very important with a business. Like, we are out to achieve X, and the problem with Alcoa, be up until that point, it was out to achieve X, Y, and Z. So Arconic gave the company a clean focus on one mission, which is to make the advanced components to keep planes and engines and heavy machines running safely and efficiently. And right now, Howmet's work touches almost every major aircraft program in the world. So if you look at a business trying to find it has its tentacles into potentially every single customer, this is the one. And it produces turbine blades and engine components from nickel and titanium superalloys, and it manufactures the fasteners that hold airframes and jet engines together, and forges huge big structural bits and pieces that effectively form the backbone of modern aircraft. And it even makes lightweight aluminium or aluminum, if you're American, aluminum wheels for the global trucking industry. Now, I don't know if it makes the stuff you actually interact with on a plane, like the hand paper dispenser in the bathroom, uh,
The carpet
and
seats.
yeah, like the bathroom the size of a coffin. We've all been in it where your shoulders touch you. I don't even know how you manage on an airplane in those bathrooms, craning your head one side and everything. And those little paper things, like they're holding onto the paper like sheets of gold, or the wee net basket thing in front of your knees. Don't think they make that. Like that, where that little net basket becomes your home. You get on and go, that's it. That's where I keep all my stuff. Anyway, Howmet is led by a guy called by its CEO, a guy called John Plant. I'm pausing because I'm sure half of our audience are in stitches already. I think it's mildly funny because Howmet operates a network. I'm such a nerd. Howmet operates a network of engineering and manufacturing plants, and I am a total nerd. And his name is John Plant. It's like if you heard the CEO of Cadbury's is called John Chocolate, or not as obvious. Or John Chill, he's the CEO of Netflix. Mike, give me another one. Help me here. I'm thinking.
Well, you told me to do this, and I went down a complete rabbit hole. So this is called an at. Oh, wait, let me get in it right. An aptronym. So
Yeah,
a person
whose
named
name is what they do.
exactly. Yeah.
Like
Uh,
my friend James Stock, but he's not in
James.
stocks. And Susie's stock. I'm like, you should be in the stock market. I play tennis with them.
Yeah. Or the soup
Anyway.
business. But
Oh
yeah, so I went down
yes,
a rabbit
very good.
hole,
Yeah, tell
and
me.
there's some good ones. Rich
Yeah, tell me.
Fairbank is the CEO of Capital One.
Is that true?
Yeah. There's
I actually just said, hey, think of a funny one for a name.
yeah.
Go
Well,
on,
wait for this now. So there's Rosalind Brewer. She is
go
on the
on.
board at Starbucks, and she was also a director at Molson Coors.
Ah, no,
Uh,
that's brilliant. Should I
yeah.
headhunted her? She's like, what am I doing here? And they go, right, shut up. Take your money and sit there.
We would just want you. We just want your name on the board. We want to make the. We want to make the company
Go on,
cards.
tell me.
Alexander Graham Bell for the telephone. This is an obvious one. William Wordsworth, English poet. Good one.
Hold on a minute. Pause. Stop the big click pause. Hold on a minute. Oh, Wordsworth is good. But hold on. When someone said, I'll give you a bell, like that was an old, well, certainly Irish expression, which was a way of saying, going to ring you. I always thought of Alexander Graham Bell. I presume maybe they were talking about the fact that the phone has a little bell in it.
I
Is
would
that
say
right?
the noise the phone makes. Yeah. Um,
Well, there you go.
Thomas Crapper. Have you heard of him?
Yeah, he invented the latrine, the modern water closet.
Yeah.
Tell me who
Billy
else?
Billy 12 Trees. Have you heard of him? English rugby player.
No. What does he do?
His dad is a tree surgeon. Um,
Hold on, you mean his dad? How old is this guy? 12?
and then there's a defender for the Belgian national team called Mark de Man.
Oh no, come on. That's crazy.
I got two more, two more. Okay.
Tell me, go.
Anthony Weiner. Have you heard of Anthony Weiner?
Hot dogs, I guess, is he?
No, no, worse, more sinister. He's an American politician who used to send pics of his appendages to people.
Stop.
And then my personal favorite, a Russian hurdler called Marina Stepanova.
It took a minute for the penny to drop. That's good. I like that.
Yeah.
They're all better than John Plant.
Yeah, well, you gave me a task, and I kind
I
of I
did.
kind of ran
Well,
with
that
it.
was good. I mean, I just wondered, like, when John Plant, like the CEO of a giant plant business, walks into a room, how are you, John Plant? They're like, yeah, right. What's your real name? Anyway, look, this guy, he turned Howmet into one of the most profitable industrials in America. It's actually a very impressive business. And halfway through this year, at the end of Q2, which they reported it on the last day of July, I think, they were hitting record highs across every metric. Second quarter revenue came in at like just over 2 billion, which was up by 10% year over year. And that was kind of a consequence of an increase in commercial aerospace, 21% jump in defense spending, which is, or sorry, defense revenue, which is not surprising. Industrial gas turbines, oil and gas components rose up, 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 up. Only the truck and transport division slipped a little teeny weeny bit, about 3 or 4%. But margins across the whole business continued to expand, and EBITDA climbed 22% for crying out loud to about, nearly 600 million, I think it was, which represented a nearly 30% margin. So this is a really hot company, and the company's ability to generate cash has been remarkable. It's one of these hidden businesses in plain sight that you could just see, you could throw it there and it sleepily gets better over the years. In
Yeah,
Q2,
charts, the stock charts, unbelievable.
tell me why.
It's up 11. It's up 12-fold since 2017, 18. It's up
Oh, interesting. I
four or
did not
five
know
fold
that.
in the last 5 years. Yeah, it's up about 100% in the last year.
Well, it's up 60% for profit. I'll take it. And anyway, it has a whole load of cash. And how it uses the cash is exactly how long-term investors like. It's what they like to see. They've repurchased $175 million of their own stock at an average price of $142. They're buying another $100 million worth, and they've paid down $76 million in debt. They've increased their dividend by 20% to about 12 cents per share. I mean, come on, that's lovely stuff. They're buying back their shares, they're killing their debt, they're paying their shareholders. It's operating like a proper, mature, cash generating powerhouse. And the balance sheet now carries about 546 million in cash, with a record low net debt to EBITDA ratio of just 1.3 fold. And the borrowings, well, anyway, look, unless you're a CFA, unless you're James in Liverpool, all of this stuff is getting kind of a bit boring to listen to, but it's actually a really, really great business. Each of Howmet's four divisions is contributing big time. Engine products grew 13% year over year, 33% margin. Fastening systems grew 9%, and so on. So for the full year, the management of Howmet expects only about 9% revenue growth. And as a growth investor, I think like 20% plus is table stakes. But that's my mindset. That's what I pursue. When in fact, profit was like, that's good enough. Good enough is great enough is good enough. So it's found a really, what is currently a great business. And I'll stop there. The whole business is a pretty remarkable evolution. Like, it started off smelting aluminium. It's like, hey Mick, how are you, Mike? What story? I'm going in here to smelt aluminium for the day. Good man yourself. Sounds like an exciting day. Fast forward a few generations, and they're building tiny wee whatnots for every plane on Earth, and it's become this precision manufacturer for everyone. Advanced aerospace programs right through the plane that you last sat on. So there you have it. Rising margins, strong cash flow, shareholder-friendly approach to deploying its capital. Howmet is proving that even in an age dominated by technology, this kind of really disciplined manufacturing can make your business a world class compounder. So that's it. Should we score it? Based on what I told you, Mike, and based on you just being you, how much do you like the sound of Howmet? Scale of 1 to 5.
Well, yeah, I just wrote it very much reminds me of September Stock of the Month. I won't give away the name, but yeah,
And I won't pretend I know it.
these are the kind of companies I'm interested in, that like build their
Yeah.
moat around
Yeah.
highly engineered processes and very sticky. And there's this element of a company being a very mission critical part, but small part of, say, its client's total bill of goods. So
Mm.
if you're Boeing and you buy Howmet's fasteners for, I don't know, engine valves or whatever else, that's a small cost. So you're not going to risk going to a cheaper competitor if it could stall an entire project. Do you know what
Mm.
I mean?
Mm.
If
Mm.
this costs 1% of this entire project, why would I risk saving, 10% of 1%?
Yeah.
That could potentially upend $1 billion project. And
Mm-hmm.
so that's a weird kind of, it's kind of a switching cost moat, but under the hood in some way. So those kind of businesses are very cool. And yeah, I would be interested. And I just looking at the stock chart alone, it feels like a serious winner. So yeah, how met, well met.
And John Plant, give it a name. Honestly, you
John
gotta
Platt.
love it.
And I just thought about another acronym.
Go
I
on.
Mike. Sorry, I'm pointing at my microphone for people who are listening on audio. But yeah, so there you go.
That one has occurred to me over the years, but I don't know.
Mike on the mic.
Mike on the mic, yeah. I don't know why I got a kick out of these things.
Yeah. All right, we'll leave it there.
Right.
Emmet, thank you very much for joining me, and everyone else, thank you for listening in to another week of Stock Club. We'll talk to you next week.